Good afternoon, boys and girls. Welcome to the Liberty Call for what is this? Wednesday, June 1st, 2021. Hope everybody's having a great day out there in the interwebs. Let's see, make sure my mic is on. Yep, I see sound on the little display. All right. Sorry, I'm a little bit late. I had to go get my month or 6 week juice fill for my infusion so that I don't have all my joints crystallize and calcify. So, anyways, hope everybody's having a great day out there. It is a little overcast here in Colorado. It's been kind of rainy, which is unusual, but I think a lot of the folks down in the lower elevations are probably appreciating it because they're always whining and crying because we don't get enough rain. It's like, dude, we got pounded with snow from January till last week, and and hell, there was snow just an hour west of me. They got 10 inches in Conifer. So for you South Park fans out there, Conifer is just northeast of South Park. Well, Fairplay, which is the real town that it's modeled after. So, anyways, all right. Well, not the best day in the market, but hey, again, if you've been watching along, you know that this is to be expected. So do not freak out. All right. The Dow Jones finished down today 0.54% at 32,813. The SP 500 was down 0.75%, closed at 4101. NASDAQ down 0.72, closed at 11,994. Small caps were basically flat at down 0.04. The VIX actually receded today 1.91%. It closed or currently is sitting at 2569. Moving on to the other Americas, Canada was down or basically flat, finished down 0.08. Brazil flat, up 0.01. Mexico down 0.48. Moving over to Europe, Germany was down a third. The UK down 0.98. France was down 0.77. Euro stocks was down 0.78. Netherlands was down 1.64. Spain down 1.18. Italy down 0.9. Switzerland down 1.01, Portugal down 0.42, Belgium down 1.03, Austria down 0.4, Sweden down or basically flat at down 0.07, and Denmark down 1.04. Both Russian exchanges were in the green today. The MOEX was up 0.8, while the RTSI was up 1.16. Heading on over to the Asian markets, Japan was up 0.65, Australia up 0.32, New Zealand up 0.13. Most of the Chinese markets were down. The Shanghai was down 0.13, the SE component up 0.2, the China A50 down a quarter of a percent, the DJ Shanghai down 0.24, and the Hang Seng down 0.56. And the Taiwan weighted came in down 0.79. So for most of the day, a lot of reds. I see the only really green or positive was in parts of Asia, and that was about it. So pretty ugly day in the markets. And again, being that I would call it let me bring up my chart here, a secular bear market that I would say started at the first of the year. What day is this right here? 1-3 January, Tuesday, January 4th. Looks like it was the last up day at the peak. Let's see, was there another one further back? Nope. So, but since then, we're down. Get rid of the line there. We're down today. As of today, we're down 10.83% on the Dow. It had gotten as bad as 15%. So we're already in correction territory, so it's not anything to really be surprised about. And again, looking at the chart pattern, unless we break this downward trend, I would expect to stay in this for quite a while. If we go back and look at 2008 and 9, you can see this took what? How many months was that? About a year and a half to go from peak to trough. And then how long did it take to get back to break even? About 4 years on the Dow. Not to say the portfolios didn't bounce back quicker, but looking at it, from a long point of view, we're probably in for a tough few years. I mean, unless something magical happens, which I just don't expect, we're going to unfortunately go through a bunch of rockiness. All right, well, let's go ahead and jump into today's market recap. Stock market today, Dow slips as tech fades, banks slip on Dimon warning. There's a little bit more of that later. The Dow slipped Wednesday, pressured by banks on fresh worries about a slowing economy, while an intraday bounce in technology stocks ran out of steam. Financials, mostly banks, were the biggest drag on the broader market as remarks on the economy from JP Morgan CEO Jamie Dimon stoked fresh concerns about a slowdown after previously describing the risk of the economy as storm clouds, in quotes. Dimon painted a gloomier picture of the economy and warned investors to brace for an economic hurricane. JP Morgan Chase & Co. fell nearly 2%, but regional banks, including SVB Financial and State Street, led the losses with both down more than 3%, even as Treasury yields continue to gain momentum. The United States 10-year Treasury yield made a dash for 3% as the Federal Reserve kicked off its plan Wednesday to reduce its nearly $9 trillion balance sheet. Tech stocks ended the day mixed after giving up some gains, pressured by rising Treasury yields and a dip in Meta platforms. The social media giant said Wednesday that Sheryl Sandberg was stepping down as chief operating officer. Wow, what are they going to do without her wokeness around there? It's going to be tough. I mean, that cyborg, what's his name? The weirdo, the guy who started it, Mark Zuckerberg. That's him. I guess he'll be all alone, his lizard self. Javier Odevan, Chief Growth Officer, will replace Sandberg as the COO in the fall. Salesforce reported upbeat guidance and better than expected quarterly results, sending its shares about 10% higher. Quote, our greatest takeaway from Q1 is management's unwavering commitment to margin and FCF growth, which we see as essential for the stock to continue working here. From here, Deutsche Bank said, though it cut its price target on the stock to $260 from $300. The gloomy outlook on the economy arrived just as data showed that manufacturing activity picked up at pace in May, but job openings fell. The May ISM manufacturing PMI rose to a reading of 56.1 from 55.4 in April, confounding expectations for a decline to 54.5. Job openings fell by 450,000 in April, but economists were quick to downplay the prospect of easing pressures in the labor market. Quote, JOLTS data do not point to any slowdown in the pace of hiring, taking the difference between gross hires and total separations, quits plus layoffs plus retirements, suggests that employment rose by 553,000 in April, about 100,000 higher than the reported payroll gain, end quote, Jeffrey said in a note. In other news, Delta Airlines forecasts sales in the current quarter to return to pre-pandemic levels, buoyed by pent-up travel demand that is likely to remain resilient despite higher airfares. Its shares only fell 5%. All right. So, again, not the best day is what it is. All right. Onto the oil front. Let's see how things are going right there. Oil inventories fell by more than expected by 1.2 million barrels last week. U.S. oil inventories declined by more than expected last week. The API reported Wednesday, just as summer travel is expected to bolster demand and keep gas prices at record highs. Yay! WTI, the U.S. benchmark, traded at 114.86 per barrel following the report after settling at 59 cents at 115.26 per barrel. U.S. crude inventories fell by about 1.2 million barrels for the week ending May 26th. That compared with a build of 567,000 barrels reported by the API for the previous week. Economists were expecting a decrease of about 67,000 barrels. So that's kind of a big difference. The API data also showed that gasoline inventories fell by 256,000 barrels last week, while distillate stocks declined by about 858,000 barrels. The slip in gasoline inventories comes as Americans continue to feel pain at the pump, with gas prices jumping to a record $4.67. Oh, everybody's going to be safe. Yes. Astros game's on. I'm trying to do two things at once. It's top of the ninth. We are losing 3-1 because JV gave up a run and then a 2-run home run in the seventh. Not ideal. It was the first thing I saw when I flipped on the TV when I got back in here to my office. All right. Gas prices have surged as oil production remains below pre-pandemic levels, hindering the number of barrels that U.S. refiners can turn into products like gasoline. Fears of shortfall in supply come just as demand is set to pick up as summer travel gets underway. The official government inventory report due Thursday is expected to show weekly U.S. crude supplies fell by 1.4 million barrels last week. So, again, until we get a handle on our energy supplies, we're going to feel it everywhere, guys. Just be prepared. All right. And from the excuses front, U.S. Treasury's Adeyemo says global phenomenon, war driving inflation. For those who've been watching, me ramble for the last year here on these videos, do you believe that? I don't. All right. High inflation is being driven by global phenomenon that couldn't be anticipated, including Russia's invasion of Ukraine. U.S. Deputy Secretary of Treasury Wally Adeyemo said on Wednesday, adding that U.S. demand remains strong. Quote, I don't think anyone saw the Russia's invasion of Ukraine coming, which is driving the high energy prices that we see today, Adeyemo said, or told MSNBC a day or after U.S. Treasury Secretary Janet Yellen said she was, quote, wrong last year about the path that inflation would take. Let me stop here. I'd never seen this guy's face before. This is the first time I've seen him. So I looked up his background. He's 41 years old. He's basically a child. He's never had a job outside the government. Came to this country from Nigeria with his parents, which totally cool. My family came here at the end of the 19th century. Totally cool with that. But he spent most of his time in college until 2009 after he got his law degree and then went to work for Black Jesus in his administration. So, has this guy got any real world experience? I doubt it. Has he ever worked in finance or banking? No, he's been a government slug. All right. Yellen told CNN, and the reason I bring that up is take whatever he says with a grain of salt, because most of these people are just passing the buck at this point. Yellen told CNN on Tuesday that since public comments she made in 2021 suggesting that a more benign and transitory path for inflation, the global economy was hit by multiple anticipated shocks, including persistent supply chain disruptions, Russia's war in Ukraine, and strict lockdown of China's economy. Well, if you know the history of what was been going on with Ukraine the last 8 or 9 years, it's actually not quite shocking that Vlad got pissed and decided to go and regulate the situation and help out his fellow Russians in eastern Ukraine. So again, there's no good guys in that situation, but I think the U.S. created a mess, and now we're sending. I think we're at like $50 billion at this point, and Ukraine's going to lose. Russia's going to get whatever it wants at this point, and we're just throwing good money after bad. So you may want to call your congressman. Let's see here. Adeyemo echoed those comments and said other countries were also struggling with high inflation. Quote, the best way to compare what's happening here in the United States is to look around the world because inflation isn't only happening here in the United States, it's happening around the globe, Adeyemo said. Adeyemo said President Joe Biden has outlined plans to address inflation, including potential future releases from the Strategic Petroleum Reserve, but dodged a question about new approaches. Quote, the best example of things we're willing to do in the future is what we've already done, including releasing the Strategic Petroleum Reserve, he added. President Biden was also looking at calling on energy producers to boost production to drive prices lower. Quote, we're open to doing everything that the president can do on his own, but he also wants to work with Congress to do things like bring down the price of prescription drugs. Yeah, because that is a big problem right now. They can't afford to put gas in their car or the electricity to power their house. They're worried about the cost of prescription drugs, which I have prescription drugs, and I haven't noticed a real change there. So, asked if he believed if inflation could be brought down without causing a recession, Adeyemo said, I do, because part of my job is talking to business leaders around the country. The CEOs make it clear that to me that they feel as if demand for their products and goods remains strong. So again, didn't really answer the question. A typical government lackey, just like Janet Yellen. These people work at the Fed, they work at the Treasury, and all they do is have high-paying jobs, and we get stuck with the problems. All right. Next article has to do with Jamie Dimon's warning: stock slide to start June after data impresses. Dimon warns. Let me go ahead and go down to his little section here because this is a pretty long article. JP Morgan CEO Jamie Dimon is making waves on Wednesday with his comments at an investor conference. Speaking at Bernstein's Strategic Decisions Conference, Dimon said the U.S. economy is facing a hurricane, and that's in quotes. As the Federal Reserve continues its process of normalizing interest rates, Dimon said he previously referred to impending challenges facing the economy as storm clouds, in quotes. Quote, right now it's kind of sunny. Things are doing fine, Diamond told the conference, according to a transcript from S&P Capital IQ. Quote, everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Andrew or something like that. And you got to brace yourself, end quote. Diamond added that he thinks the banking industry is in great shape, as are consumers sitting on over $2 trillion in savings. Quote, jobs are plentiful, wages are going up, consumers are spending, Diamond said. The lower income folks, not quite so much as before, but everybody else, it looks like they have $2 trillion more in savings. I don't think that's going to stop spending in 6 or 9 months. And so that to me is the bright clouds out there. So, and you can read this, it's attached in the notes if you want to read through that at your leisure. But Mr. Diamond is one, I don't agree with, all of his policies or his views on things, but he's dead on here. And I worked for him back almost 20 years ago when I worked for Chase, and I can't believe he's still running the place. All right. Last article here comes, it's about Michael Burry. I don't know if you may not know who Michael Burry is. If you ever saw the movie The Big Short, his character was Christian Bale's. Very, very smart guy. He's really good at pointing out what seems obvious, but the smart people who are running things never seem to notice. All right. Michael Burry, the hedge fund manager depicted by Christian Bale in The Big Short, has been aggressively investing during this market downturn. Burry's latest 13F filing for the first quarter of 2022 shows a broad range of new investments and some interesting strategic moves with options. That's a significant shift from his previous quarter, where Burry was selling most of his stock portfolio and calling for the mother of all crashes. He's not exactly bullish on the market, on the overall market. Quote, as I said about 2008, it's like watching a plane crash, Burry wrote last week in a since deleted tweet. It hurts, it's not much fun, and I'm not smiling. Well, the thing about, if you do want to follow Michael on Twitter, he deletes every tweet. He doesn't leave any evidence of what he puts out there. So you can go on to Reddit, and I think it's called Burryology, but you can follow that, and they take screenshots of all of them, and then all the junior investors like to try to guess what he means. He has a lot of cryptic stuff out there, but anyways. But the man who shorted the U.S. housing market and won clearly sees pockets of opportunity. And I'm not going to go into what he thinks. You can read this at your own. I'm not here to share his investing advice. All right. Well, that's everything I had for today. I hope everyone has a fantastic night. I'll be back tomorrow. Tucker struck out. Bases loaded, guys. Let's cross our fingers and hope that the Stros pull this out. 1 out, top of the ninth. And like I said, the bases are juiced. All right. Well, I'm going to go finish watching the game and go eat some dinner because I am starving. And like I said, hope everybody has a fantastic night. And I will see you tomorrow, folks. Bye-bye.